So if you've decided on what business you want to start, there's 3 available business structures in Canada. So the first is sole proprietorships, the second is partnerships, and the third is incorporating your company. So I'm going to look at sole proprietorships first. So this is the easiest form of business to set up. Essentially, you're the business. You can start this tomorrow without even a formal registration. The business is you. So whatever your name is, you can start operating as that. The advantage of a sole proprietorship is that it's the simplest form of business. It's the easiest to set up. It has lower accounting fees and a simpler tax return. The disadvantages here are there's no liability protection. So if something happened in your business and you were being sued, you're personally held liable for everything. So your personal car, your personal house, those all could be subject to the law. The last disadvantage of sole proprietorships is it's harder to get business financing. So if you were to get loans to increase your business, it might be a little bit more difficult. So the second form of business is partnerships. These are like sole proprietorships, except it involves more than one person. I'm not going to go too into depth about partnerships. As an accountant for the last 10 years, I've seen a lot of different partnerships go south. The only way a partnership really works is you guys have a definite agreement in writing that outlines, each person's responsibility and how your net income is going to be divided and what happens if one person wants to leave. That's generally where the problems kind of arise. So that's not a business structure that I recommend. And the last type of business that you can operate in is in an incorporated company. So this is the LTD Inc. The benefits of having an incorporated company is, first of all, there's limited liability. So if something bad happens in the company, you're only liable for what the business owns. Anything you own personally under your own legal name, that is protected. Second is there's continuance. So sole proprietorship would kind of be over once you pass away, but as an incorporated company, that business can still continue without you. You can either sell those shares to somebody else or you can pass those on to your children in a will. Getting financing is a lot easier when you're an incorporated company. And finally, the biggest advantage is a tax deferral. So you can essentially choose how much taxes you personally want to pay once the corporation has paid its own taxes. The disadvantages of having an incorporated company, well, to set it up is much more expensive, right? There's legal fees. If you're the only shareholder, it's a little bit cheaper, but if it's a group of people and you may have to get a lawyer involved, that can add up. There's also ongoing legal and accounting fees each year. So the accounting is a little bit more complex than a sole proprietorship. The most successful companies operate eventually as an incorporated company just because the tax deferrals are huge. So to get into more specifics, who shouldn't operate as a sole proprietor? So if you're already earning income from a T4, so employment income, and it's fairly high, say 60,000 and above, and this business you start is going to be profitable in the first year, you should incorporate right away, because whatever that net income is going to get added to your taxable income for that year, and you are generally going to be at a higher tax bracket, so you're going to end up paying more in taxes. And then on the flip side, who shouldn't operate as an incorporated company? So if you need to spend all the money you're going to earn from your sole proprietorship in the year for your personal expenses, such as rent, gas, food, and there's not going to be much money left over in the business, then I highly recommend that you operate as a sole proprietor, because otherwise you're not going to get a tax deferral and you're just going to pay more accounting and legal fees. The only exception to this is if you're in an industry that has high liability in what you're doing. So if you're in construction or someone could get injured, then you should incorporate just to protect your personal assets if you have personal assets. Generally for a business, the natural progression is to start as a sole proprietorship. And then once your business starts generating enough money that you don't need to withdraw everything from your bank account, that's when you incorporate. Final note here, I just want to mention all these situations are very unique to each person. Setting up a business entity is not so cut and dry. This is one of those answers where we have to say it's best to go and see an accountant before you choose a business structure. Most accountants will offer a free consultation. Thank you. Like and subscribe.